So I sent a last minute text last night to a few of my private clients who just recently passed the technical analysis portion of my program, just to see if they could figure out the reasoning behind this trade, and a few of them caught it in time. And in today's video, I'm going to be going in and breaking down the exact reasoning, the exact thought process and mindset that I had going into this trade and why I took this trade. So I'm going to be breaking everything down regarding this trade. So kick back, relax, and enjoy the video. And by the way, if you guys do find some value in these videos that I'm releasing, please feel free to drop a like and leave a comment below, or do whatever you got to do to help out the YouTube algorithm. I don't know how the algorithm works, so if you need to yell at your phone, like yell at your phone for the YouTube algorithm. Do whatever you got to do. But if you do enjoy it, feel free to support, and let's get into the video. So for those of you that are completely brand new, some of this stuff might not make sense to you. And I'm not going to go into very granular details in this video. That's not what this video is for. If you guys remember, the very first video that I ever released on this channel, I mentioned that this channel is going to be going over beginner, intermediate, and advanced techniques. So this video is more for my advanced or intermediate viewers. So just fair warning for those of you that are brand new, you might want to come back and check on this video maybe in 6 months or a year after you guys do have some experience. So this way you can fully understand what I'm explaining in this video. But the trade that we entered was on GBPAUD, the Great Britain Pound versus the Australian dollar. There's one thing I do want to mention before I go into the trade, is that the same exact setup happened on GBPAUD and also on GBP/NZD. Now, a quick little tip to you guys, a lot of brand new traders would, if they see the same type of setup, they would want to initially jump the gun and enter the same trade on both pairs. Now, word of professional advice is, if the same entry does occur, if the same setup does occur on two different pairs, do not enter both trades. That's doubling your risk. You're overexposing yourself in the markets, because sure, if it goes in your favor, you'll make double the money if you enter two trades going in the same direction. But if the trade goes against you, you're overexposing yourself to potential losses. So if the same setup does occur in two different pairs, do not enter the same trade on two different pairs. Now, when I mentioned GBPAUD and GBP/NZD, notice Australian and New Zealand, both of those countries are very similar, right? So these two currency pairs generally move in the same direction at the same time. They usually generally move in unison, which is why I mentioned these two specific pairs, Australian and New Zealand. So now that you guys understand that concept, the entry that I entered on, it was right over here. It was 1.7917. I went short on GBPAUD. But before I go into the trade details on this pair, I'm going to show you that the same kind of setup happened on GBP/NZD as well. The setup on GBP/NZD was right over here, but I'll go into why this trade I didn't take and why I took GBPAUD instead. Now, going into GBPAUD, in order to fully explain this, we need to kind of go back in time so you can get a full understanding of like what actually happened. Okay, so this is the chart. You'll notice I'm currently on the 4-hour time frame, and if you notice, it's somewhat going in an uptrend recently in the past 4-hour time frame. However, breaking it down going into the 1-hour time frame, you'll notice it is somewhat consolidating, yet it is having a slight downtrend. What do I mean by this? I mean the highs are making lower highs. The highs are getting lower and lower and lower. And what's happening with the lows? The lows are doing the same thing. The lows are getting lower and lower and lower. So the same exact things happening with the highs and the same exact things happening with the lows in a smaller time frame. But in the overall picture, on the 4-hour time frame, it is an uptrend. So this would be kind of considered like a counter trend. But anyways, deleting all this stuff here, going back to the analysis, the first thing you would do when you notice a trend, the first thing I did was I drew my trend line. So you'll notice this right here is connecting the lows of the most recent lows. Now, as we connect the lows, we're looking for the price to potentially continue to respect the trend line. And if it breaks the trend line, that means there's a lot of bearish pressure. So at that point, we're looking for potential sell. But anyway, so and real quick, we're looking at the 4-hour time frame. So every time I hit forward on this replay tool, 4 hours of time is being passed. So this happened very, very, very slowly. So hitting next, showing the next candles as they're being painted, you'll notice the first time that the price approached that line, the price did end up the trend line did end up being respected off the price. So what I did here, I zoomed in and then I adjusted the trend line to allow it to fit this this wick right over here. So this way it's touching this wick, this wick, this wick, forming the uptrend. And anyway, so let's continue to go with the analysis. We noticed at this point that the price, if the price was going to continue in the uptrend, if the price was going to continue to go in the uptrend, we would have saw a potential higher high, just like it was creating higher lows. Notice the lows were getting higher, the lows were getting higher, the lows were getting higher, and also the highs were also getting higher. The highs were also getting higher. However, at this point, this did not end up creating a higher high. It kind of failed to break this area. So what this created was what's called an area of resistance. So this shows that if it wasn't able to successfully create a higher high, this shows a lot of very bearish, or in other words, sell pressure. So now I'm looking to keep an eye out for a potential area to go short, for a potential area to sell. The first clue that this kind of solidifies that now we're in like a bearish time frame for this specific trade is if this price does end up piercing this uptrend. Let me kind of make this thick to kind of specify this trend. If the price does end up piercing this uptrend and it closes below, then we should automatically signal in our mind, look for a potential area to go short. So let's move on to the next 4-hour candle that kind of got painted. And you'll notice this did end up breaking the trend line. So now this is a very huge sell bearish time frame that we're currently in, and now I'm looking for a potential area to sell it. And the area that I'm looking to sell it is if the price does end up reaching this trend line again. If the price does end up from here, the price does end up reaching anywhere along this trend line again, I'm looking to be entering a short right at that point to maximize the move downwards. But anyway, so now at this point, this was just a patient waiting game. And by the way, this right here, this was last week. So this was like on Friday that the price pierced it. So now the weekend has passed and now we're waiting for the price to see what it's doing. If the price does end up going back up, then we'll look for the potential short. But anyway, so I'm just going to continue to paint the rest of the candles and show you the rest of the analysis. You'll notice the prices keep going down. And here's one thing I kind of want to mention. At this point, the next thing that I noticed was a potential channel being formed. First thing we have is a resistance area. But now if you'll notice in the 1 hour or 4 hour time, in the smaller time frame, it is making lower lows and it is making potential lower highs. So I created a channel from here connecting this top, and as I form this potential channel, I'm just drawing the lows in the same exact direction. So it's creating like what's called like a parallel channel on the way down. So I'm looking for a potential sell somewhere near the top of the channel and on the break and retest of this trend line. And there's a few other clues, confluences that I looked at to also give myself an analysis of a potential high probability short. So the next thing that I looked at is whenever you see the price creating what's called a swing high followed by a swing low, we should automatically trigger in our minds to draw what's called a Fibonacci retracement, a fib retracement. So I drew my fib from the very tip top point of the swing high and I ended the fib at the very lowest point of the swing low. Now I'm looking for potential area to short. The next clue that I saw was this 61.8 fib also lined up with the break and retest of the area, which is also this is the same area of the top of the channel. And the next clue that kind of gave me an opportunity to potentially short this was this area right over here was creating what's called another resistance, just like what ended up creating over here. The price was resisting to go any higher than this area. So I'm looking for the price to potentially resist off of this area as well. And the next sort of confluence, the next clue that kind of that I saw to allow me to kind of look at this trade as a potential setup was looking at it at the daily time frame. And you'll notice this little purple line that you see here on the daily time frame. What this purple line is, by the way, this is what's called the 100 exponential moving average, 100 EMA. So I noticed the same area as well. This 100 EMA was approaching this same exact area. So now we have a few different confluences, a few different telltale signs that if the price does end up approaching this area, this could be an area where the price reacts to continue to go down short or in the sell direction. Now the question is, if the price did not end up reaching this high, what would I have done? I would not have chased the trade. If I saw the price rejecting here and continued to go down, I wouldn't have like went to my phone and quickly entered a short. I would have just considered this as a missed opportunity, a missed trade, and I would have just looked at another setup. I would have just moved on with my life. So we don't ever chase trades. We let the price come to us. We are patient with our trading. And if the price does end up hitting our entry, then we get activated. So at this point, I had a lot of different confluences, a lot of different reasons why this could be a potential entry. So I created what's called a sell limit. I went into my app, I went into my broker, and I placed what's called a sell limit, just having a sell order ready, pending for the time if the price does end up reaching my entry, my trade will get activated for the short. So my sell limit that I placed was 1.7917, and my trade is now ready, pending, just waiting to get activated if the price does end up reaching it. So moving on to the next candles, I'm going to show you what happened. I'm going to kind of go in and kind of explain what happened in this case here. So the price, what ended up happening, it's crazy. The price spiked up, and then it dramatically spiked back down. And this happened all in a span of 5-10 minutes. And I want to show you how large of a spike this randomly was. The price from this candle spiked all the way up over 80 pips before dramatically dropping back down. And I'm going to go into the 5-minute chart, meaning each candle that you see is 5 minutes worth of time. I'm going to show you how quickly this price spiked up. So this price from here spiked here all the way up here within a time span of just 5 minutes before dramatically dropping down. And what ended up happening, I did some research after this spike happened, and the analysts are saying the reason this spike was even created is because a lot of massive stop loss orders got triggered. A lot of huge, massive trades got triggered in their losses, which caused the price to spike up. So a lot of hedge funds and institutions were shorting GBP because if you look at this same spike happened on pretty much every GBP Great Britain pound pair. So all the funds that were shorting, all the massive funds that were shorting GBP, the stop losses got triggered, which caused this quick little spike to come up. And if you notice the time that this happened in, if you look at the very bottom, it says this happened at 1920. So in Central Time Zone, where I live, this was around 7:20 p.m. This happened in the evening, this quick little anomaly spike. And 7 o'clock at night, this is the Asian session, the Tokyo session. So during this session, at this time, there's usually not as much liquidity compared to the other sessions in the market. So the liquidity was very low, combined with a lot of massive stop losses being hit, which causes the price to spike up. When I say low liquidity, I'm talking about in comparison to the London session or the New York session. So this had very low liquidity, which caused the price to spike up. And I'm not going to go too much into detail of how the price spikes up, but just to give you like a quick little summary, you can do your own research on your own. But the reason why the price spiked up is I want you to think about whenever someone is entering a short, they're selling the currency, looking to buy it at a lower rate to buy it cheaper. So they're selling it to buy it later on at a cheaper price. But if they have their stop losses and their take profits placed, whenever they're entering their sell, whenever they're going to close the trade, that means they're buying it back. And in theory, they would want to buy it back at a shorter trade. That's the whole point. Whenever anyone shorts anything, you're selling it at a high price and wanting to buy it back at a lower price sometime in the future. That's the concept of shorting anything. But if you have a stop loss placed, again, whenever you're entering a trade, you sell it, but whenever you close a trade, you buy it back. Same thing with the stop loss. So when you're entering a stop loss, you're pretty much saying, I'm willing to buy it back at a higher price just to kind of cut my losses. So as you have your stop losses placed, as the institutions and funds had their stop losses placed here, as the stop losses got triggered, it caused the price to bump up. And more stop losses got triggered, the price kept bumping up exponentially until all the stop losses got triggered, and then the price continued to go back down. Then this only happens when massive positions stop losses got hit. But either way, that doesn't change the analysis that I had. My trade just literally got triggered at this time on this candle, and I went instantly into 50 pips profit. So from here all the way to down here. Now going back to the 4-hour time frame, I want to show you what continued to happen. So my trade is now triggered, and now we got to figure out where I'm looking to take profit. So I'm going to show you the different areas I was looking to take profit. The first area, which was where I took partial profit, my take profit one, my TP1, was this area right over here, because this was an area of support. So this area of support, you'll notice that the price was being supported by this zone over here. So I was expecting the price could potentially bounce back off of this area and move back up. We don't know for sure. That's the whole point of trading. You just have to analyze and kind of see what's going on in the charts. So that was my first potential take profit. Now my second potential take profit was at the bottom of the channel, or in other words, this little channel that you see, or in other words, this area right over here, this second support. So this is where the second take profit was. And it was at 77.50 is where I put the second take profit, right over here. So first take profit in this zone, second take profit right here at this bottom rejection area, because the price could as easily reject off of it and could continue to go back up. But anyways, let me kind of zoom in and go to the 1-hour time frame and show you what ended up happening afterwards. The price continued to go up, and the people who kind of didn't enter their trades, whose trades didn't get activated here, since it was a time of low liquidity, not everyone's trades who even analyzed this chart or entered a short here, not everyone's trade, their shorts got triggered, because the spreads could have been wide and there were not enough active participants in the market for everyone's short to get triggered. So the people whose trade didn't get triggered on the first go, the market was kind enough, the market was forgiving enough to kind of go back up to allow the rest of the people who did analyze it, the people who were analyzing this pair the correct way, those people did end up getting triggered as well. Now, what ended up happening after that, the price continued to go back down, kind of switch back to the 4-hour time frame and show you what ended up happening. The price plummeted. This take profit instantly got activated. I took my partial profit. And if you guys don't know what taking partial profit is, I'll explain it in a different video. I'm not going to go too much into it. That's not the point of this video. All it is just securing some of the profits and letting the remaining of your position run. And a few candles later, the second take profit also got triggered as well. So, and my stop loss, I had adjusted it all the way to this area right over here. So this is where my stop loss was, right over here. 30 pips above my entry, above this little zone right over here. Now, all in all, this was a 1 to 5 risk to reward ratio. So for those of you that kind of look at your trades based on risk to reward, risking 1% of your account, meaning if you're wrong, you would lose 1% of your account, looking to gain 5% of your account. Or for those of you that risk 2% of your account, you're looking to gain 10% of your account on this trade. All in all, this trade happened in a time span of just 12 hours. So depending on whatever your account is, think about growing your account 5% or 10% all in a time span of 12 hours. And for those of you that count your profits in terms of pips, this was a 167 pip trade. And calculating the profit in terms of pips is, if you were trading at a 1 standard lot size, this 167 pip trade, this would be a 1,670 Australian dollars, since we're in GBP AUD, 1,670 Australian dollar profit trade. Converting that to US units, this would be a $1,300 trade, all in 12 hours. And for those of you that are trading a mini lot, this would be a $130 trade. And for those of you that are trading a micro lot, this would be a $13 trade. And for those of you that have a mid 6-figure account, risking 1% of your account at a 10 lot trade, this would be a $13,000 trade, all in a time span of just 12 hours. So hopefully that analysis kind of explain how this trade worked. And let me just kind of compare this to the GBP NZD trade, as I mentioned before. Now, if you look at the same exact pair, the same exact thing happened on this pair. If you look at the same swing high, you draw your fib all the way to the same swing low, you'll notice that the price rejected in the same area at the 61.8 fib. And for those people who did enter this trade, this was a very, very good trade to enter. But the reason I didn't enter this trade, because there weren't a lot of other confluences showing that this would be a good trade. Meaning, this trend line that I drew on the other pair, this same trend line, you'll notice that the trend line did not even touch this entry. So that didn't line up. That didn't match. And the second thing, you'll notice that the resistance area, that didn't line up either. So that was also a no-go. And the next thing, if you look at the daily time frame, looking at the EMA, this also didn't line up either. So there weren't many different pockets or areas that were kind of pointing at this specific area to be a high probability setup. But for those who did enter the trade, for those who did probably enter GBP AUD and GBP NZD, this was a very good trade. Or for people that just analyzed GBP NZD itself, this was a very good trade just based off the 61 fib. And this trade itself netted quite a few pips. This trade right here was over 340 pips. But in reality, had I taken this trade, I would have closed my trade right over here on this trend line right over here. Let me make this thick to kind of show you what this trend line was. I would have taken my profit right here along this trend line here. Same thing for the break and potential break and retest. My trade would have been closed right over here. So this would have been a 270 pip short. But again, I did not take this trade. I took GBP AUD just because it had a lot more confluences, a lot more reasons that this specific area right over here had a very high probability of going in my favor, because a lot of things were kind of lining up for this to be a high probability entry. So I hope you guys got some value in this video. And if you did, please do leave a comment down below and like the video if you haven't. And definitely, if you haven't subscribed to the channel so far, definitely subscribe to the channel and hit the little notification bell so you can get notified whenever I do upload any future videos in the future. And it really does motivate me to post more videos. So again, thank you guys so much for your support, and I'll catch you guys in the next video. Take care, guys.